各位，在过去3年里，一场看不见的汽车革命正在全球发生。主角不是特斯拉，也不是丰田，而是中国。在拉丁美洲到东南亚，从欧洲到中东，中国制造的汽车正在一辆一辆驶入全球的市场。然而这一场扩张并不是靠价格战，而是靠技术、供应链和能源体系的重塑。当美国忙着设关税，欧盟忙着调查补贴，中国已经默默在重写全球汽车版图。问题是，这只是出口的胜利，还是产业规则的全面重构呢？美国战略与国际研究中心揭露了一个几乎被忽略的现实，那就是中国已经在不到4年的时间，从全球汽车出口量第5跃升到世界第1，而这背后不仅仅是卖出更多的车这么简单。这一场变革牵动了整个汽车产业链的命脉，电动驱动系统、关键矿物、智能网联技术以及电池供应体系。更重要的是，中国不再只是制造业基地，而是在逐步改变全球汽车科技的引领者。在美国，中国电动车的关税高达 100%， 新一轮特朗普政府还在计划进一步提高。而在欧洲，欧盟对中国电动车进行了反补贴调查，看似壁垒重重，但国际研究中心的数据却显示，中国的电动车出口依然在激增，因为欧洲在买，拉美在买，东南亚在买，甚至中东和非洲市场都在买。关税阻止不了趋势，中国车的竞争力并不只是便宜而已，而是全面性。从电池化学到整车智能，中国企业已经掌握了从上游材料到整车算法的完整生态。而在同一时间，美国还在为锂矿开采而纠结，欧洲还在讨论是否要保护本土产业。汽车不仅是一个交通工具，更是一套全球供应体系的象征。而在电动车时代，这一套体系正在被中国重写。比亚迪、吉利、长城、奇瑞正在墨西哥、巴西、印尼等地设厂。这些工厂不仅服务当地的市场，更成为绕开贸易壁垒的全球跳板。即便墨西哥与巴西重新提高关税，中国品牌依然热卖。原因在于，即使加税，它们依旧比欧美品牌更便宜、更稳定。这就是规模与供应链的力量。当你能控制电池、控制矿场、控制软件生态，你就能决定整个产业的节奏。美国智库的研究员还提到一个耐人寻味的观点：中国出口的不只是车，而是一整套能源系统。这意味着，未来谁控制了电动车的技术，谁就控制了能源消耗和出行的方式。中国不需要以地缘政治的方式来扩张，只需要通过新能源汽车和电池的出口，就能在经济上实现嵌入。今天印度、印尼、巴西的道路上跑着电动车，电池大多数来自中国。即使他们抵制中国车，也无法抵制中国的电池。这就是产业链的软实力，比军事同盟更安静，却更深远。所以当我们讨论汽车霸权的时候，问题早已经不是谁造车更多，而是谁定义了未来交通的逻辑。当下一次能源危机来临的时候，你会发现世界的电池、关键产物、驱动芯片有可能几乎都绕不开中国。让我们看一下视频。
China has emerged as a global leader in the automotive sector. An industry that employs millions of people around the world is central to many countries' innovation ecosystems. China has moved from being the 5th largest exporter of cars in terms of volume to being number 1 in less than 4 years. But this is not just about the number of vehicles that are exported. This is about technology. It's about electric drivetrains, which are reshaping the automotive sector, but also are reshaping supply chains, with critical minerals becoming more important in some cases, and certainly batteries becoming central to geostrategic considerations around the world. It's also about other types of technologies, such as connected vehicles, autonomous vehicles, and increasingly AI as well. So today I'm joined by my colleague Ryan Featherston, Associate Fellow with the Trustee Chair in Chinese Business and Economics at the Center for Strategic and International Studies, to talk about these issues and in particular China's impact on emerging markets and how this is changing the global automotive sector. I'm Ilaria Mazzocco, Deputy Director and Senior Fellow with the Trustee Chair at Csis. Welcome, Ryan.
Good morning. It's nice to speak with you, Ilaria.
Ryan, let's look at some charts, which is like our favorite thing to do.
Yes.
What are we looking at here?
So this is a more detailed version of what we were looking at before in terms of China's exports, but instead we're looking at it in value terms, so you'll see up there in US dollars. And this is the division between traditional internal combustion engine vehicles and electric vehicles. So the blue is internal combustion engine vehicles, the green is electric vehicles. So you can see, as we saw just in the last chart, a huge kind of expansive explosion, if you might say, of vehicle exports from China. And really one thing we like to emphasize is that although you hear a lot about electric vehicles and China's rise in terms of electric vehicles, really China is exporting a lot of traditional internal combustion engine vehicles as well. And this chart in some ways overstates that, in that this is in value terms. If you were to look at the same chart in volume terms, so in terms of the number of vehicles, you actually would see that China exports more internal combustion engine vehicles in terms of numbers than it does in terms of electric vehicles. The difference is electric vehicles are often higher value vehicles. They're more technologically sophisticated, as you were referring to earlier, Ilaria, and so they tend to be show up a little bit more in this value chart here. And one important thing about this chart is that in a lot of ways this is intimately related to China's domestic vehicle market, which is also experiencing a very rapid transition.
What's that transition, Ryan?
Yeah, so just last year, it reached the point where about 50% of vehicles sold in China were actually electric vehicles. And so there's still a lot of capacity to produce internal combustion engine vehicles in China. And so that has led to this bottom half of the chart happening, where those companies are having to look for new markets as China is transitioning its own automotive industry. And at the same time, there are a lot of, there's a very intense internal competition in China, even in the electric vehicle segment as well, which has been the target of a lot of state support. A lot of that support has now been phased out, and so we're in this new phase where Chinese automakers are competing to see who will kind of have control of that market. That's led to a lot of competition, price wars. Chinese government has actually come out and kind of said that it's not happy with this level of price competition, but that's also leading to this top part, this green part of the chart, where those automakers are looking to find new markets where they can sell their vehicles, hopefully at a higher margin in order to maintain their profitability.
And these would be topics for other videos that we will make on both the internal combustion engine side and also the domestic market in China and the role of industrial policy today. But let's just focus in on those export of EVs. Where are they going?
Yeah, so as you can see here, EVs are going all over the world, right? It's not an export that is
except for the United States.
Except for the United States, because we have very high barriers to EVs. Here we have 100% tariff rate, probably a little bit more with all the new Trump tariffs. We also have very strict rules on connected vehicles that make it basically impossible for a Chinese automaker to sell the kind of vehicle that an American consumer would probably want to buy. But as for the rest of the world, China has really expanded a lot, both in advanced markets like the European Union, the United Kingdom, but also in developing markets, which are in Asia and Latin American and Caribbean. So there really is a very global expansion of Chinese automakers. It can't just be defined by one market.
And I think, one thing that we might want to highlight is this is not necessarily the preference of Chinese automakers. Yeah. They'd probably love to just sell to very high-income countries like the United States and the European Union. But, there are dynamics that are pushing them to diversify aggressively.
Yes,
right?
Yeah. So the European Union, for example, introduced tariffs last year on Chinese battery electric vehicles. There's still been a lot of imports from China in the EU, but that's a topic of debate and a lot of kind of contentious policymaking, negotiations underway between the European Union and China. So even though there's still a lot of sales there, I think it's something where Chinese automakers rightly are looking at other parts of the world in terms of opportunity. So I think you're right in that Chinese automakers would very much prefer to sell sell to rich economies that can buy more expensive advanced vehicles that often have a higher margin. But at the same time, they're kind of taking a yes and approach and looking at these markets, but also trying to see where in the rest of the world is rife for competition and market entry.
Right, and we'll be zooming into these countries in just a second. One thing to note is that we often don't necessarily pay as much attention to countries in the developing world because those markets, those automotive markets, are much smaller. But if you then zoom into that country, we're seeing some really interesting developments.
Yes.
So we'll look at those in just a second. But first of all, I just wanted to make one quick point. Just a couple of years ago, I always used to point out that, well, exports from China don't necessarily mean exports of Chinese brands.
Yeah.
And I think that is still actually quite true for the internal combustion engine vehicle, right? There's still a lot of Western OEMs that are exporting from China. Those are for the internal combustion engine vehicle segment. But for EVs, it's increasingly Chinese brands, right? So you do see that Tesla still has a sizable export from China, mostly to Europe, European joint ventures as well. But for the rest, it's really mostly Chinese brands. And I think that also reflects that increasing focus to the rest of the world, right? Where a lot of those brands are going at this point in time. So let's talk just a little bit about what's happening in these emerging markets.
Yeah, so this is Mexico. As you can see, there's been a really rapid rise just in the last year, actually, of sales of Chinese companies. So BYD here, this big blue blob right at the end of the chart. What's interesting about Mexico is that Mexico actually reintroduced tariffs that it had originally. It originally had phased out or kind of exempted Chinese imports from a series of tariffs on EVs. It used to be 20%. They reintroduced that tariff recently, partially due to their own concerns about their industrial base, partially probably a mix of U.S. pressure. But there's still actually this huge spike in sales is happening after the tariffs were reintroduced, right? So it's not as if tariffs are a ban on imports, and in many cases, these Chinese vehicles are very competitive and affordable, so that they can actually be popular even in cases where there are tariffs in the market. One thing too that we like to emphasize is that for Mexico, these cars, despite a lot of concern in the United States about Mexico perhaps serving as a backdoor for Chinese imports, to the United States itself, these cars are really geared at consumption in Mexico. We can see that in the trade data for Mexico. The types of EVs that it imports tend to be much cheaper than the types of EVs that it exports to the United States in particular. But still a very interesting dynamic where Mexico is relying a lot on Chinese cars for its own EV market.
Right, and this actually mirrors a lot of imports coming into Mexico, even for the internal combustion engine vehicle segment, even though Mexico then makes a lot of EVs and ICE vehicles that it then exports to the United States. Very similar pattern in Brazil, where there's actually been also Chinese investment, right? BYD and Great Wall Motors have opened factories.
Yes. Yeah, and we'll talk a little bit more about kind of the strategies and Brazil's own domestic policy and how it's kind of had an approach to trying to attract some of that investment. But for now, you can see a very similar story to Mexico, except over a little bit longer time period, last couple of years. Really BYD, but a little bit more diversity in terms of the players. Great Wall Motors, as you said, opening a factory. Geely Volvo. Volvo we're familiar with thinking about as a European company, but it's actually owned by a Chinese firm called Geely. Chery, also Chinese. So really also very rapid expansion. Brazil also has reintroduced tariffs on Chinese EVs. It actually has a phase-in where tariffs will get higher and higher. But really that phase-in, you can't see that here. There's still a lot of sales from Chinese firms.
Right, and we'll be talking a little more about this in our next video, where we'll be digging a little deeper into country-level dynamics. But let's just look very briefly, again, Indonesia. We see a lot of Chinese players, although it's slightly more diversified, I would say, than the Latin American countries we just saw.
Yes, and Indonesia is a case, and we'll talk a little bit more about the motivations, where there's been a surge in trade openness. So they've actually removed some tariff barriers in exchange for some commitments to investment. You can see that here, a little bit more wobbliness in the data. Sales sometimes have these cyclical trends, right? So important not to overinterpret big drops. But BYD, SIC, Chery, even VinFast, which is actually a Vietnamese company, you see their kind of market entry into Indonesia after that period of trade openness. So an example of how dynamic. You can see Hyundai, actually, a Korean company, a little bit more prominent prior, just a couple years ago, actually. Now that story has shifted more towards Chinese automakers.
And finally, let's talk about a country that doesn't actually have that many Chinese players and has domestic players, and that's India. Right, so India has very high tariffs on Chinese vehicles. It's been very hesitant to embrace Chinese investment, except I would say for SAIC, which is a state-owned enterprise, right?
Yes,
a Chinese state-owned enterprise. But it has a joint venture with a Chinese player and actually an Indian player.
Yes.
And that Indian partner is expected to take on more ownership of the venture, reportedly as a result of geopolitical tensions. So I think, in India, we see still a lot of hesitance on the part of the government to really sort of open up to Chinese exports, but also Chinese investment. And so this is then really the result where you see actually Indian, players doing relatively well within the Indian market, right? In terms of volume, then if we saw it as a share of Indian sales, obviously Indian market is much larger, so it doesn't show up quite as neatly on that pattern. But here's what I thought would be interesting for our viewers to see is when you then zoom in,
yes,
Chinese value chains are still important.
Yes, yeah. So even though India, is a country that has its own domestic players and is increasingly looked to foster those domestic players, when you look at the components and one of the most important components being the battery of the vehicle, India is still very, enmeshed in Chinese supply chains. And the two largest players, Mahindra and not BYD, and Tata Motors actually have agreements with Gotion and BYD to supply batteries. BYD, I know we've been talking a lot about as a vehicle manufacturer, but they're actually very vertically integrated and they produce their own batteries. They also sell them to other companies, including companies in India. And so you can see here, even though India has done well to try to support its domestic auto manufacturers, it still relies a lot on Chinese technology, specifically for the batteries. And that's partially because Chinese battery technology is very affordable. They have chemistries like lithium iron phosphate that tend to do very well in more affordable models. Those Korean manufacturers focus more on expensive chemistries like nickel, manganese, cobalt. So that's something that really gives Chinese companies an edge globally.
Right. If you're trying to make a $20,000
Yes.
vehicle, which these Indian manufacturers are, which could become real competitors to Chinese brands around the world, you need those cheap batteries. And those cheap batteries for now are largely made by Chinese automakers, which complicates, I think, the story quite a bit.